What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. As always, on this channel, it is not financial advice, it is simply financial education. I simply want to teach people how they don't have to slave 9 to 5. Instead, they can hustle 24/7 in the market like everybody else. But without further ado, let's get into the ticker. So as you guys see from the chart, today's ticker is going to be HIMX or HIMX. Most of you more than likely have not ever heard of this company. It is a technologies company, so this is in the tech sector. However, I want to point out one important thing, especially for my newbies out there. Anytime you see this ADR symbol on a ticker, you need to pay attention to that, because that means it is not a domestic company from the US. So essentially, any shares that are listed on the market, on the US market, are essentially either through, more than likely, because this is an Asian play, this is specific out of Taiwan, not out of China, but specifically for China plays. Whenever you are buying a Chinese stock play and you see ADR, essentially you are buying paper from the Cayman Islands. I could literally do a whole video just on that segment alone, but just please keep that in the back of your mind. It is very important to know what you're buying when you buy something. Now, this ticker was brought to me by a request. Someone messaged me, asked me to do a review on this play. Because it is a semiconductor play, it did spark my interest. Now, before we get into the fundamentals of the company and what they do and what they don't do and who they do business with and all that good jazz, let's first take a look at the chart, because I want to point out a couple things that I noticed in this play that interested me. First of all, as you see, this is for year 2021. The gray dotted line is the mark of 2021. You see that it started the year on a massive run-up, essentially peaking out at 1785, essentially, back on February 9th. From February 9th at the peak, you see this consolidation, peaks and valleys in this channel, essentially going from 1596 down to 972. And since then, it's essentially been trading in the middle of this channel, peaking again in late June, early July, and since then has been respecting this downward trend that you see here by this pink line. The green line is a 50-day moving average. The white line is an SMA. So please keep that in mind. I know that sometimes the lines can get a little confusing. I like to include them because it shows you essentially where a position stands, right? You would normally want to trade or buy stock that is trading above a 50-day moving average or a 200-day moving average. In this specific case for HIMX, it is trading below both of those. Now, today you do see this green engulfing candle. An engulfing candle is when the candle engulfs the candle before it. So you see the red candle. Essentially, this green candle swallows the entirety of that red candle. That's called an engulfing candle for my newbies. So that's a bullish sign. Another bullish sign would be if, for example, tomorrow's trading day, we start formulating a green candle directly above this white line, which is, again, an SMA. You can either have a 5, a 7, or a 9, right? I specifically use a 7. So if tomorrow we formed a green candle and it was completely above this white line, that is another bullish sign you always want to see in tickers. Now, what did I want to point out? Well, first and foremost, this is the year 2021. As I did mention, you've been trading in this channel. Now, if we go back to year 2020, you will notice one important thing. We see a very similar pattern, right? So again, the gray line is the start of 2020. As you see, it did start off the year with this massive run-up. Why? It's a tech company, right? And you'll find out why it has these massive run-ups. As the holiday season picks up and people buy consumer electronics, it tends to have these nice run-ups. Again, it peaked up in middle or late February 2020 and then had the downfall, right? As we know, the March 17th, March 19th pitfall for COVID, when the world got shut down, is when you see this massive dip in HIMX, followed by it backtracking into this channel at the time from $4.25 to $2.93, right? After that, as you see, in late November, close to their earnings, in 2020, they had earnings on November, what is this? November 12th. After their earnings, you see this massive run-up bleeding into 2021, right? So now, go back into 2021, what do you see? Again, you see the same consolidation between this one channel for the majority of the year, a rundown leading into earnings, which this year's earning is going to be on November the 4th. And potentially, if they have good earnings, you could see this spike up leading into 2022 once again. Now, Take a look at the MACD. We are currently in a buying period and we are in a downtrend. That is something you do need to keep in mind. Number 2, look at the RSI. We are trading below neutral, heading towards neutral on an upward trend. Again, signifying the green candle here. And then if we look at the ATR, you essentially have a swing of $1.04, right? So this stock could swing $1.04 up or $1.04 down. So you're essentially talking about 11.40, or you could be talking about 9.32. So to kind of give you an idea of where that is. Now, why did I mention the previous channel for the previous year versus this year? Well, on Thinkorswim, the earnings aren't really reported really well to my liking. For earnings, I like to go and use TradingView, specifically this, right? So now, if we go back into 2020 for HIMX and look at the earnings, you see in 2020 they had a $29,000 beat. They had a miss of $6,000 in second quarter, or then they had a miss of $16,000 in third quarter, and then the end of the year they smashed it with $34,000 in the positive side. If you go to their annual, you see that the end of the year they missed by $30,000. Well, remember the 2 quarters they missed. One was 6, one was 16, for a total of $24,000. So throughout COVID and the shutdown, they only missed their earnings estimated by $24,000, right? They added an additional $6,000, you could probably say, due to the shutdowns that they saw in March, right? Potentially. So you could easily explain the $30,000 difference for earnings for the year. Now, let's go into 2021 and watch the major difference that we see, which is why we also see the price of this stock spike to 17 and consolidate in this upward channel. You see first earnings, boom, $12.69 million beat. Second earnings, $2.14 million beat. So that's 2 earnings back to back, and you've essentially added $15 million difference. You're talking thousands miss the years before to millions beat. That's a significant increase in volume and growth, right? So based on these 2 earnings we've already seen in 2021, what could you easily expect from this earnings that's coming up on the 4th, right? In my opinion, you would easily expect that to be in the millions on the beat again, because they haven't skipped a beat. There hasn't been as many COVID shutdowns this year. The world hasn't stopped essentially all 2021. We've been growing and reopening throughout the days, throughout the months, as the year's been progressing, right? It's something you need to keep in mind. Now, please do keep in mind this downward trend that you see marked here with this yellow line, right? We are currently trading below that. In order for us to change this pattern, right, and get out of this trend, we would need to start forming candles on the top side of this line, right? For us to be in a position where we would feel that this would continue to run up. But that kind of gives you the fundamentals of the chart and the ticker. Now, let's get into what they are, right? So HIMX specifically does have an investor section and a webpage. I already took the liberty of pre-screening it to kind of filter out some information we want to know. So HIMX is a worldwide market leader in display drivers and timing controllers used in TVs, laptops, monitors, mobile phones, tablets, automotive, digital cameras, car navigation, virtual reality, devices, and many other consumer electronics. Additionally, HIMX designs and provides controllers for touch sensor displays, in-cell touch, and display driver integration, single chip solutions, LED drivers, power management devices, micro displays for augmented reality, AR, and heads-up display, right, for automotive. So that right there should tell you, number one, they do a lot of stuff with displays, chips, in the semiconductor space, right? Specifically, the word worldwide market leader stands out, right? That means you need to pay attention, because this company is important, right? And I'm about to show you why that is true. Again, they are integrated into mobile phones, tablets, laptops, TVs, PC, camera, automotive, security, medical devices, home appliances, and then the word a lot, etc. They're involved in a lot, right? And you're going to see some of the people they do partnerships with that will solidify that thinking, right? They're headquartered out of Taiwan. Like I said, this is not a Chinese play. This is a Taiwanese play. Taiwanese usually, I don't often see their stocks listed as ADRs, but for some reason this one is. That's a concern to me, but nothing major, right? Based on the player we're talking about. As you see, they do business in China, Korea, Japan, Israel, and the US. HIMX has 3,023 patents granted and another 503 patents pending approval worldwide as of June 2021. HIMX has retained its position as a leading display image processing semiconductor solution provider to consumer electronic brands worldwide. Now, the other piece I wanted to point out were the quick financials they touched base on here. So take a look at 2021, you see 187 million. Quarter 1 2021, you see 309 million. That's a massive jump. Then you see quarter 2, 365 million. This is continuous growth that you want to see in a company whenever you choose to invest in them. You don't have to understand every single detail of financials. You just have to be able to pinpoint trends, right? This is a positive trend anybody could see, specifically year over year, YOY. That's a 95.3% increase, right? Look at the gross margins. So this is not net profit. This is gross. So before anything else, right? You see 21%, 40%, 47%. Again, continuous growth, something you definitely want to see. Non-IRS profit, right? Loss. 67.1 million, 109.1 million. Again, increase on the right direction. Now, getting into, again, they have more financials in here. I'll leave this pinned in the details of my video if you guys want to dig through it and find some more information for yourselves. I'm only trying to touch on the most important pieces to conserve as much time as possible. But I did go in here and look at their strategies and some of the products that they make, or they specify specifically. They do break it down by each individual category. What I was more interested in is to see who they're doing business with. So right away, something that stands out to me: Samsung, Lenovo, Vivo, Sharp, Panasonic, and then you see Amazon. Huawei is a ginormous company worldwide. They don't sell products in the US, but they are a competitor worldwide because they do sell products in a lot of different countries. Specifically here locally to me, if you go down south about 4 hours into the next country down called Mexico, they do a lot of cell phone purchases in Huawei, a lot of appliances, refrigerators, stove. They do a lot of products for Huawei down south of the border where I live specifically. I can tell you that from experience because I've been there. I know what people buy. I've seen some of their products. They try to compete as closely to Apple and Samsung as you could imagine, right? But that stands out to me, right? Specifically, Kyocera is another low brand cell phone company. You see LG Displays, that's a big TV producer and electronics producer. ZTE is another company some of you may know. They do low grade cell phones as well. But as you see, they are a massive player in this space to do business with all of these major companies, right? If you go down into the auto industry, you see Mercedes, Jaguar, Vivo, Oppo, Huawei, Sony, Lenovo, Samsung, LG. Again, all major players in the tech space. Very good to see, very promising. We go further and you see Google, Microsoft. Again, this company is doing business with major players in the tech industry. And they obviously have a full grasp on this market, because otherwise, why would they be doing business with such big global players, right? That is something you do need to take a look at whenever you choose to invest in specific companies, right? Looking at recent news, the most recent news I found was essentially that they had a 2.88% down day on strong volume. If we go look at the chart, you do see that they have had increased volume here as of late. They did have a red day last Friday. Today, Monday, they did have a green day bounce back. Again, I am specifically looking to break this trend, hopefully prior to earnings reporting, having a good earnings beat, and then continuing that positive trend that we did see the year prior, going into 2021 from 2020. If you go into 2019, they did essentially have this little semi-run up as well. It wasn't as powerful as impactful, but again, they were doing, lower volume from the reporting of earnings, number one. Number two, they were in the thousands, not the millions on misses. Now they're beating on millions. I'm expecting to see that for this earnings as well. That's something I would look at, especially if I were to open a position in this play. Full transparency, I have no position in this play. Again, this was a request for me to do a video on, which is why you see this video here today. Lastly, as I always like to touch base on, I always go to Unusual Wells to try to show you guys some information that you can find from the options chain, because it is always useful and resourceful, especially when you're looking to establish a position. So first and foremost, right away we can see there is 767,000 on call premium, 1.6 million on put premium. So we're not evenly tied, but we're getting there, right? We're close. If you go into the breakdown, you see right away what stands out: the March 2022 expiration date and the strike that is being targeted is the $20 strike. Well, this ticker essentially today is trading at $10.36. So that is a double up in that sense, right? Keep in mind what is coming, holiday season, but also keep in mind what has been going on with the container ships and the restriction, right? You will have to keep those two things in mind this year specifically, especially with the media talking about shortages coming up, especially for the holiday season. So keep that in the back of your mind, but pay attention, right? It's good to know. Now, if you go in specifically in Unusual Whales and you click on the ticker, it gives you this other breakdown and other data. One thing I like to do is see today's levels specifically for any ticker, and it breaks it down by category, right? By premium, people who are spending $1,000 or less. And what do we see? Very bearish. Not a good sign. For $1,000 or less. Premium for $5,000. What do we see? Very bearish. Again, not something you want to see. $15,000 premium, bearish. Once again. And $30,000 premium, extremely bearish. So that is something you do need to keep in mind. Again, specifically for me, what I would be looking for to open or establish a position in this play would be a break from this trend on the top side. Number one. Number two, a smashing earnings for this quarter, specifically heading into the holiday season. Seeing those two things, I would most certainly be a player going along on this play, because I think for the amount of business that they do with the amount of players that they do at $10.36, that is extraordinarily cheap. They should be trading at a much higher rate. Specifically, Taiwan is a semiconductor haven, if you will. So they should be trading a lot higher if this is the true volume that they're doing business with and the players that they're doing business with. I would certainly expect this to have a much significant share price. I think a lot of the negative China sentiment that's in the market right now is actually affecting this play in the negative sense and bringing the price down. I don't necessarily think it is specifically due to them or anything that they've done, but I think earnings are going to correct this course, because if they do have a beat on earnings, I do fully expect this to have another run up heading into 2022. But I think you guys get the point. Again, as always, if you have questions, leave it down in the comments below. If you found the video resourceful, please don't forget to like and subscribe to the channel, as it does help with the growth. You can always hit me up on IG or Twitter. I do have a new IG dedicated just to my channel, Stock Hustle 2021, for those interested. And other than that, guys, I will catch you in the next one.